Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just always keep in mind a couple things. There's always risk involved with trades that you take, so you want to manage your risk in a way that makes sense for you. There's no guarantee of profits, obviously, with any one trade. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from the same location. And all the functionalities and features you see in our web trader are also available in our mobile app. So if we log in here in the upper right-hand corner, then we'll find ourselves in the web trader platform. Now, a couple big stories to talk about from last week coming into this week. And then carrying forward in terms of fundamental news. The meeting that occurred Thursday, Friday, and Saturday last week in a city called Jackson Hole, Wyoming. It was a big meeting that occurs each year with some of the big names from different countries that are responsible for monetary policy decisions and such, and maybe heads of big banks, etc., that have something to say about the economy and economic topics. This occurs each year, and the big speeches really were planned for Friday last week, and technically it started Thursday evening. And we did our session last Thursday and talked about how going into such an event, there's a fear of the unknown, meaning you don't really know for sure what they're going to say. And when there's the fear of the unknown, a lot of times, even if they're going to say things that are positive, leading up to such an event, you can see a rush into safe haven assets like gold or like the US dollar. And so if you go back and go to our YouTube channel, you can watch the session from last Thursday and see what we talked about. But what we did is we worked out entry plans for and risk management plans for a couple of the safe havens. And so examples were gold and going with the US dollar, maybe to strengthen as a safe haven currency against the euro leading up to those speeches. And so because there's a lot of volatility surrounding that type of fundamental news event, then putting a stop loss sometimes isn't a good idea if you have another option that's more patient with your risk management. You can very easily hit your stop loss before it gets going perhaps in the right direction where you would have made profits because of the volatility leading up to such a big event. And so what we did was we instituted a couple trades on safe havens, gold being one and going with the USD as a safe haven currency being the other. And you can see the little symbols here. We protected with AvaProtect, which it's a special way to protect with paying a cost up front. And we took trade sizes that worked out to be 1% of my balance as an example risk management plan. So the cost of the protection for 2 full days, which protected all the way from last Thursday to Monday this week, was only about $600 per trade. So we can see the cost of protection on this one being $600, the payout being over $1,300. So the overall move was a profit. The same was true on the Euro USD, around $600 protection, over $1,100 payout. And so at the end of these trades, it was $1,000 profit or so, even more. And so it was an easy turnaround on that with a unique way to protect with AvaProtect as you lead into such an event that quite obviously creates a bit of fear until you hear what people say. Now, I closed these off early as it got closer to the speeches. You can see the dates and times that I closed. I didn't wait for them to speak. Once the fear of what they might say pushed the safe havens into profit, I closed them early. I had protection all the way to Monday. I closed them Thursday night. You see, I closed the same day that I opened. So we read the market right in terms of what the fear of that event would bring from the fundamental event coming. and were able to ride to quick profits on the safe havens before a word was said, before any of the speakers spoke on Thursday last week. And so that's just an example of the power of fundamental news even before it happens, just leading up to a symposium like that, like they had at Jackson Hole, Wyoming. And the reason I closed off early isn't because there wasn't the potential for further profit, but because there was the potential that something might be said in those speeches that would work against the safe havens strengthening, and indeed that happened. So the surprise move was Jerome Powell all of a sudden seems very open to rate cuts, as he's been fighting it for months now, really for the past year. And all of a sudden, it seems he agrees with the Trump administration that the tariffs did not play a big role in inflation, and that likely they're going to do rate cuts maybe once or twice this year. So that was a big deal coming out of that symposium. Really the biggest headline that Jerome Powell, who is the person who really makes the decision in the US for the monetary policy moves with the rate cuts or not. And so there's a lot of positivity coming out of that after he spoke on the markets, especially the US markets, that, hey, rate cuts, looks like they'll be coming soon, and up went the markets with that. And I believe that Euro USD then reversed itself after I took the profit on it, because that news actually worked to weaken the US dollar, the fact that all of a sudden everyone believes rate cuts will be coming soon in the US. So the fear leading up the big fundamental news events sometimes is more predictable than waiting for the actual event to occur. That's the point there that I'm making. Okay, so now we find ourselves this week with some other news going on. NVIDIA, being one of the largest companies in the world, if not the largest, it depends on where the stock price is at any given moment. There are a couple companies there, a few that move in and out of being the highest net worth companies, but NVIDIA being right up there, worth trillions of dollars, worth more than the economy of many small countries. So it's big news when they have their earnings that come out. And so their numbers were released yesterday after the US market closed. And while their earnings per share exceeded expectation, their revenue exceeded expectation. So you'd think, wow, joy, their stocks should go up and the market should rally. Well, it turns out, just exceeding expectations for a company like NVIDIA isn't enough. Their projections for the upcoming quarter weren't as strong as expected. So their numbers were better than expected, but what they had to say was not better than expected. There's fear from NVIDIA about the tariffs on China from the US tariffs, where that might all shake out, whether it's going to hurt their chip sales in China, etc. So there's still some uncertainty there, and that was expressed along with those numbers being released. And so they not as good of numbers as expected. So overall, the company was, the revenue was better than expected, but in their data center revenue, it wasn't where they wanted it to be. Okay, so that actually was read as a negative, and the stock pulled back so far pre-market. So that's the situation. A bit of jitters because of NVIDIA, and I wouldn't be surprised with the US market open to see NVIDIA, as much as it's heavily traded, if it indeed gaps down, it might have the ability to pull something like the NASDAQ and the US 500 down, at least maybe temporarily with it. We'll see. But that's something to keep in mind fundamentally as you start to look at technical signals today or other fundamental news, that there's that nervousness there about China and NVIDIA. And by the way, Tesla just reported a huge drop in European sales, something like 30 or 40%, which is really bad news for Tesla in the European market. So now we've got kind of a double whammy on two of the largest companies out there. As the US market opens, I think that's a bit of bearish pressure that might be there. So as happy as everyone was about the Jackson Hole summit last week and the prospects of rate cuts in the US. Maybe some would say finally rate cuts in the US, overdue rate cuts perhaps. That positive optimism maybe is dampened now by NVIDIA and Tesla, but we'll see how the market responds as it opens, but it's something to keep in mind. Now, some specific announcements we can look at on the economic calendar. And let's look at today. Let's click on the 28th. So a number of announcements came in, nothing really major, but we have some big announcements out of the US coming up. GDP growth rate, that's a big one, and initial jobless claims, also another big one, ranked as high impact on the markets, on the USD pairings specifically. So if we look at GDP growth rate, a lot of times the reactions aren't what you would think it would be for such an important number in terms of the expectations and exceeding or not exceeding expectations with the numbers. If this comes in above forecast, half the time up, half the time down. Happened twice in the past year. Okay, the data shows you might as well flip a coin to try and guess which way this would move in the hours following the data. Okay, and we could switch. That's USD JPY. If we look at Euro USD, we see the same thing. More upward movement than down on the Euro USD. So GDP growth rate exceeding, coming in above forecast, one down, one up. That doesn't convince me that I would want to trade on that. So the power of this tool not only can help you decide that you want to trade on something, if the past data looks convincing, but here it shows that it's almost anyone's guess which way this will move when the growth rate's above forecast. What if it's below forecast? It hasn't happened in the past data here. What if it matches the forecast? One up, one down. So this is not an event that I want to trade on, because regardless of how this comes in, the results seem to be 50-50 in the past. Anyone's guess which way it will move. And so this is one that I would sit out, even if it came in better than expectation or worse than expectation. One thing I will point out is after a drop in GDP growth with the last numbers that came out, look at the expected turnaround, a 3% increase in GDP growth. I feel just from common sense that if it comes in at that number or higher, that the market will really like that idea, that type of improvement from negative GDP growth to something like 3% or better. I probably would be leaning towards major US indices responding positively to that. So it's something you could keep an eye on, but the data in this tool doesn't convince me of that. Just my common sense tells me that. So if this number comes in better than expected, I'm probably looking for entry points that look opportunistic, maybe to go long on major US indices. But again, that's not data driven here. That's more of just a feeling, okay? Now, if we look at the initial jobless claims, which come in at the same time, it seems that maybe traders are leaning towards this data to help them determine how they want to trade more than the GDP. And they happen to come in at the exact same time, which maybe is why the GDP growth rate data gets skewed. It isn't that there isn't positivity about growth rate when it comes in better than expected, for example. It's just that maybe at the same time, the jobless claims came in worse than expected. So they counteract each other. So let's look at the jobless claims and see if they look the same as the GDP growth rate. If we look at all events, it looks like close to 50-50, 42% up, 58% down. But if we qualify it, if they come in above forecast, now we've got 2/3 of the time the USD strengthens if initial jobless claims are higher than expected. Okay, that's bad news. When jobless claims are higher than expected, that's bad news. So when this comes in as bad news, the USD strengthens perhaps as a safe haven out of fear. We could speculate about why it would strengthen, but the data it's set is not that convincing to me, because I see one that went down significantly, one that went up significantly, and one that almost didn't do anything. So to me, this almost feels like 50-50 again. When this comes in above forecast, this data is not convincing me right now. What if it comes in below forecast? Okay, that's a little more convincing to me. And even though the percentage isn't great, 56%, it's close to 50-50, the size of the movements help to convince me. When the initial jobless claims come in good news, below forecast, less jobless claims than expected, what we see is very little green movement up size-wise. They're all pretty small. And not only do we have more dropping numbers-wise, but it's also larger on average. So I'm seeing probably 85% red and 15% green, or maybe 80% red and 20% green with overall PIP movement here, even though the percentage is 56% to 44%, which isn't a big difference, but the movement is much larger when it went down. So it not only went down a little more often, it went down larger when it went down. So it's kind of a doubling effect then on being able to convince you one way or another. It looks like if this comes in below forecast, I'll look for my entry point to short the Euro USD. I would expect the USD to strengthen with this good news, with below forecast numbers on jobless claims. And so if in the first 5 minutes, it does this, okay, up or really flat on a lot of these, only one of them went down right away. In the first 5 minutes, we've got a lot of movements that were less than 5 pips or they were up, all of them except one actually. And after 4 hours, almost all of them, the majority of them went down way more than 5 pips. We're talking 20, 30, 40, 50 pips. And the ones that went bad, you could have a short stop and get out. So you can have a whole trading plan based on this data from the past movements, based on how the numbers come in. And it looks like it's a more significant reaction on this particular announcement when it's good news, when the jobless claims are below forecast. So I would selectively watch this announcement. And if it comes in below forecast, I'd be looking for an entry point in that first 5 minutes to see if then I can catch these downward movements that have occurred in the past. Okay, and there's no guarantee you're going to win each time you try this, but if you try each of these announcements, say 10 times, the jobless claims numbers come in each week, each month, and the other announcements also are repetitive. CPI data, PPI data, GDP numbers for different countries, different regions. You'll find ones that work best for you, for your schedule and also for the results, and then you can stick with those 2 or 3 announcements that you find the best success with long term. And so it can just become one part of your trading strategy set to have 2 or 3 announcements that you find work the best for you. And do small exposure, small risk each time you do it till you have enough data points to say, okay, the initial jobless claims out of the US, for example, I've won 7 out of 10 times. Okay, so I'll stick with that as one of my strategy pieces to trade on that announcement on the numbers, just as an example. And you know, there's the non-farm payrolls each week, or I mean each month. There's all kinds of industrial production numbers out of the European Union, the UK, the US, Australia, etc. So you can find announcements that fit your schedule and look at their past announcements and see which ones have the strongest percent predictability from the past announcements. And then it's an easy process then to do the data-driven trading, as we call it, to trade in the direction that makes sense, statistically speaking, with small risk, and see how the results turn out for you. I suspect you'll find some announcements that turn out quite well for you when the data shows high predictability from the past. Okay. Now, what other tools do we have here, fundamentally speaking, to be able to trade with a strategy that's based on fundamental news beyond the economic calendar? We can also take a look at the market buzz feature. And this is really a great time saver because you can find the most recent news on any instrument that we offer and see what is that most recent news. Why is NVIDIA the biggest circle here about I don't know, 50 times bigger than the average size circle for all of the others, because it just had really big news, and there's a lot of talk about NVIDIA right now. So our system found over 6,700 mentions online recently. So that's why it's the biggest circle. So we click on it, and we can see what is that most recent news. Obviously, they'll talk a little bit about their data that was released, and you can go through and read any article that's here to see if it convinces you to buy or sell on the asset that you're looking at. The technical analysis is here. The technical trend says price may rise by 8% or so. If you want to see the signal, just click on the trend and it'll load the technical signal. It's showing you the support levels that if it drops below, in this case, this blue line, if the price drops below there, then they say sell. That establishes a downtrend. But as long as it's above this support level, the blue line, they say it's a buy signal with take profit up at this green line zone up here. And you can read all the information from the technical side right here to understand why they're predicting a buy on the technical signal. Now the question is, does the fundamental news then match that technical signal? I would say no, it doesn't. Their earnings numbers, while they exceeded expectation, there's a lot of fear, and there was selling immediately after those numbers came out, because they also, with those numbers, as we already discussed earlier in this session, they expressed concern about China, which is one of the biggest markets for buying NVIDIA's chips. They expressed concern about the tariffs, the trade negotiations, etc. And so when you start to read these articles and see headlines like this, NVIDIA stock falls after data center sales miss forecasts. CEO calls Blackwell demand extraordinary. Okay, so they have great demand, but they missed their marks in the data center. So if you want to read the whole article, you click on story continues. And you can just click through their pop-ups or join the Yahoo community and read that whole article. And a lot of these articles, you don't need to sign up for communities, but this particular one, let's see if we can get it to load. Reject. Oh, they're trying to give me cookies. That's all I had to do, was refuse the cookies. Okay, so NVIDIA stock falls after data center sales miss forecasts. CEO calls Blackwell demand extraordinary. So you read the article and decide for yourself, and also watch the interview. He's right here talking. You can watch the interview, you can read the article, and decide if then you trust, based on the most recent fundamental news, this signal that the price might go up 8% plus. Okay, I don't think there'll be a huge sell-off on NVIDIA. It's a strong company with great demand and great products. But do you think right now is the best time to do that or not? The fundamental news can help you decide that. And when the market opens on the US stocks with AvaTrade, you can take a look. What's the trend doing? Is it dropping initially? Maybe it drops down to a nice support level, and then you want to buy, because the signal says that it should buy, because their numbers really weren't bad, just some weak projections, weaker than expected. But at least the point is, you can find the information right away, and you can make an informed decision, so that when you're following, say, a technical signal, you can not just blindly follow it, you can follow it after you've read the most recent information on that particular instrument. And it's not just the ones that are trending the most. It's not just NVIDIA. You can look at any of these instruments that you can trade on with us. Amazon, okay, it's a smaller circle right now. It's only 215 articles and mentions found online. I say only, that's still a lot, but not like NVIDIA, 6,000 plus. But we still can check out whatever it is you might want to have news on that you're interested in trading on. It's expected to rise as well with the technical signal. We can see that here. You can look at the details of the technical signal, and you can also look and find what is the most recent fundamental news that's come out in the past hours You see their timestamp 3 hours ago, 6 hours ago, etc. Okay. Whole Foods will transition to Amazon labor framework. Trump tariff threats put countries with digital taxes in a bind. You can click, read these articles and see how do they relate to Amazon. And does that help you decide whether you want to follow this signal or not? Okay. So just a simple process to go through, and it's another strategy you can add to your maybe 3 or 4 strategies that you use, one being maybe the economic calendar, information that comes in like we just looked at, another being the market buzz to get the most recent news to trade, and thirdly, we talked about bigger ticket items, about the interest rates from the Jackson Hole Summit, the interest rate idea coming out of the US that it'll be lowered. You can also trade on bigger picture ideas like that doesn't have to be news that came right now. It can be news from last week. Okay, so if you think overall the US dollar has reason to weaken, if indeed there's going to be interest rates coming soon, so maybe you start to look at US dollar pairings. So I know the euro was climbing for a long time against the USD, and then it pulled back. At the end of last week because of what was said at that summit. And if I can properly bring up the Euro USD chart, we'll have a look at it. My keyboard's acting up on me. There we are. Let's do it here. Looks like I might need to refresh my screen. Apologies. Now we're there, Euro US dollar chart. Let's see the signal right now, short-term signal, buy. Okay, that kind of goes in line with expected rate cuts out of the US. Let's take a look at the bigger picture also. This is a signal I think looks solid. From a technical perspective, it just broke this resistance level here. That's a breakthrough candle that's happening live as we watch it. So here's the resistance level. Okay, it established this yesterday and today. Resistance, 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 boom, breakthrough candle. And that's exactly what technical traders rely on is here's the resistance level. You put your pending order to buy if it breaks the resistance, because many times once resistance is formed, once it breaks with momentum, with what we call breakthrough candle. And so the technical signal was all over that. It was reading probably from last week, the momentum about the expected rate cuts coming in the US dollar's kind of weak because of that. And up goes the euro breaking through, and we were already saying it before we brought the chart up, and boom, it's happening already right in front of us. So that's the power of fundamental news once again, to be able to predict the movement before we looked at the chart. Because of the fundamental news, we look at the chart and perhaps we're just 2 minutes too late to make this trade. Okay, I would project for the short-term trade, maybe we're late. If you're putting a short stop loss, it's already up in profit towards the take profit, and maybe it pulls back temporarily once it hits that profit mark up there. But for a longer term trade, you're not necessarily late, because that's a long-term policy decision for Jerome Powell now to be talking about rate cuts. And so I'm not looking at this little short take profit. I'm on larger candles now, looking that the fundamental news supports that. Why shouldn't the euro go back up to these resistance levels up here, not on the 15-minute candles, but on the 4-hour candles? I'm talking back up to 117.30 type range here, where it was not that long ago. Resistance, resistance, even broke through this resistance before pulling back. So this looks like longer term, 117.30 based on the fundamentals. It makes sense. And the technical breakthrough now just showed momentum in that direction to maybe confirm the idea in your mind. So when you can get a combined technical breakthrough of a resistance level with a breakthrough candle that we just saw, combined with fundamental news that's large scale, we're talking about economic policy in the US over the course of the next, say, 6 months, kind of an expectation of a couple rate cuts maybe. So that fundamental news paired with the technical breakthrough of that resistance level that literally just happened maybe convinces you that this is a strong uptrend in the bigger picture for larger candle moves like 4-hour and 1-day candles. So if that's the case, I'm looking at take profit 117.30 as an example because of the fundamental news combined with that technical breakthrough. I'm looking at stop loss back below this broken resistance. Once it's through, if it's a true breakthrough with real news behind it, maybe it shouldn't reverse and go back below there. So I'm looking to get below this line with my stop loss. So 116.55, 56 is that support level that it just broke through. So 116, let's say 48 to get below that by a number of pips. So stop loss 116.48 as an example. It's on sell. I need to switch to buy. Buy, okay, take profit 117.30. Stop loss 116.48 as an example. Okay, so I see, I don't know, better than 3-to-1 potential profit to risk. I could even be a little more patient with my stop loss, 116.45, 116.40. Okay, so now I've got my stop loss down here, well below the resistance level that it just broke through. So even if it pulls back a little bit and tests it again, it would really have to reverse to hit my stop loss, makes it a bit safer from being hit. And I'm still better than 2-to-1 potential profit to risk without having to break these highs over here to hit the take profit. Okay, so very reasonable take profit and very reasonable stop loss below a nice breakthrough of a resistance level that it would really take a reversal to hit that stop loss. And if it hits the stop loss, then you accept the fact that the news must have changed. The fundamental news drives these movements mostly. So if I go one lot, what am I risking? Maybe I'm comfortable risking 1% of my account or whatever that is for you. You adjust the trade size to make sense for the amount you're comfortable risking. So 2.4 lots, I'm risking just over 1% of my balance. 2.2 lots, just under 1% of my balance. 2.25 is about the sweet spot, okay? Just over 600 would be 1% of my balance here. I'm a hair over that maybe, but the market's moving. So it's changing by the second as the market goes up or down. But I see I'm right around 1% risk and about a little better than 2% potential profit on this move. So if I win even 50% of the time on moves like this, or even 40% of the time, I'm going to have a nice overall profit on if I do 10 trades like this over the course of a week or a month, and I win even 40% of them, I'll have a nice return. Okay, so trying to make a couple percent return on the account, risking what I deem to be a small amount on my account, but you can risk 0.5%, 1%, 2%, whatever it is you're comfortable with. But the point is, know what you're risking, and then you can make your move completely informed. So now we're in the direction of a technical breakthrough, broke the resistance, in the direction that we already thought it should move before we looked at the chart based on the fundamental news. And so we've got the whole risk management set up. We've got hopefully wind at our back with the rate cut hopes in the US serving to weaken the USD against the euro, in our minds anyways. That's what we hope will happen. And then we'll see how this carries out. And typically, if you've got strong fundamental news behind you, moves like this, they can work out more often than not, okay? Any questions, comments before we wrap things up today? I'll pause for a moment. Okay, great. I don't see anything popping up, so I must have been pretty clear. Thank you all for joining. It was a nice session, and good luck with your trading the rest of the week. Keep your eye particularly on the tech sector, maybe the NASDAQ 100 and other tech stocks, and see how they may react to NVIDIA's potential pullback. We'll see what happens here at the open. All right, everybody, thank you for joining, and have a good rest of the week.